So having a look at the data and talking to the various companies that we talk to every day, whether they're developers, architects, engineers, builders, contractors, the second half of this year is characterised by one thing predominantly, which is a move away from single houses. You can get that from looking at both the consents and talking to builders who traditionally rely on that type of work. That will shift somewhat to commercial work, but also as far as residential, more multi-density apartments, build to rent, which I know we're discussing later, and essentially, at least for now, away from the traditional single homes, which I know we're discussing later.
Point of view, I think we've seen already there's been a change from sort of single houses to the terraced houses in a residential context, and this is not only in the typologies but also the scale. So we've gone, I think a few years ago, it was an exception to have a few hundred houses built in one location. It was also the exception to have lots of terraced houses. So I think we've seen this huge change from the very low density to the medium density. And I think moving forward, if we look at the Auckland area as an example, the need for a compact city and the need for greater typologies, greater affordability, different living requirements that people will have, we'll see that this carries on sort of intensifying further. So from our point of view, we've had huge growth from moving from that low to medium density, and I think there is definitely opportunities for businesses moving from the medium to high density moving forward, because it is what we see internationally, and I think it is what is going to happen in Auckland. I think it has to happen to promote greater sort of housing typologies and affordability.
I'll just touch briefly on basically the policy settings first, which is, many of you would know that the National Policy Statement on Urban Development, which is called the NPSUD, got passed in August 2020, and it was really a directive from government to go up. Basically, 6-storey minimums, move what was single dwelling housing zoning to flexible zoning, no car parking requirements, get rid of the blanket heritage overlays, and really promote going up. And at the moment, that's really playing out to 2024 when that really comes into effect. But at the moment, we're seeing the councils all having to respond to the NPSUD, and they're coming back with what is their future development strategy, which again is a really strong push on densification. We would argue actually you need to go up and out, but that is the current strong focus. And I think for New Zealand, we've got over half our consents in the last year were really for, as we've said, townhouses and apartments. But as I totally agree with Dan, it's actually a push to go up. And what we have to do as an industry is really build the capability around densification and multi-storey living in terms of the home builders and actually how we do facade engineers and how we actually really collaborate around that. And that's probably what we're seeing, because at the end of the day, and we talked about this briefly, land is really expensive and people want amenity. Actually going up is the best way to get to more cost-efficient outcomes because of just the sheer cost of land.
I might just add some complexity to that. One of our competitors said to us the other day that he calls it the death zone, and that between, I think it's 4 and 10 stories, it's very difficult to make an apartment block stack financially for various reasons. The cost of land, as you said, you get the fact that you're paying for the foundations regardless and the roof regardless. So there's various factors. So private developers have a real challenge at the moment to make apartment blocks work unless they're tall, and even then it's not easy, or up to 3 levels. I think they're called walk-ups. So everyone knows construction prices are very high at the moment and probably not coming down anytime soon. So that's just a further complexity that everyone's facing in the market at the moment.
I guess I'm probably not going to specifically answer the question, but just add a bit more complexity in there around, I guess, the economic factors that are driving things. I guess in our view, the answer is that things are only going to start to get bigger with higher cost of land, you obviously need to get a bit more yield out of that property, whether you're talking about industrial development or residential or commercial. The need is to get essentially get more value out of that property. We obviously have a few challenges at the moment in terms of financial or availability of capital. Private individuals are going to struggle more and more, and so larger entities are going to be able to get further advances in larger developments. I don't know if we want to get too far into the politics, but obviously later in the year we're going to have a bit more direction around what sort of developments are going to be more enabled by policies. We talked about going up, but also out, and it looks like at the moment there's reasonably diverse signals from the main parties as to what goes well there. So I think at the end of the day, the main lesson in our view is that things are only going to get bigger and more value to extract out of the land.
I guess really to just sort of re-endorse what Bruno said, cost of building is significant. We all know it's increased quite significantly over the last short while. Cost of capital is horrendous. I thought we'd see a bit of a tail off in speculative housing, so multi-unit residential apartments, but I think the latest stats show that we've had 65,000 plus net migrants in the year to March 23. They've all got to live somewhere, so I doubt you'll see a cooling down as much as I would have expected anytime soon. But there was an Infrastructure New Zealand report came out earlier in the year, and I think you've got to look at the underlying issues that we've got as a country. $90 billion worth of investment needed to bring our water network up to speed. We're 170% of current capacity is what we need in electricity generation within the next 10 years. So I think the scale will increase, but I think you'll see a lot of major infrastructure investment or spending from government. But then if migration continues, you'll have a lot of what I call social infrastructure, houses, hospitals. Again, look, I'm not a very political person, but we all read the horrendous tales about waiting lists in the health service at the moment. We need more hospital beds, we need more doctors. You can't have more hospital beds without building more hospitals. So I think the industry's got some exciting times ahead, but I think they can be quite challenging also.
I think obviously the recent period's been pretty difficult for everybody in the building industry, and particularly there's been a lot of challenges for us undertaking sort of scale, volume, residential contracts. It's no different to the pressures everybody else has kind of felt. But I think from our point of view, the ability to innovate over the last little while has probably been slightly less, because it literally has been a lot of firefighting. I mean, when you commit to building 200 houses and all of a sudden there's labor shortages, there's building material shortages, there's, people are at professional capacities, it's very, very difficult. So, the ability to think about innovation has been slightly stifled in response to the factors recently, but there are a lot of practical changes in the here and now in direct response to things like inflation that we've had to basically look at. And I think for us, when we're looking at the type of contracts that we're signing and the type of pressures that we've had very recently, there's a lot of changes, or I think there should be some kind of changes in terms of risk apportioning contracts, because it's been phenomenally difficult for builders, commercial or residential, to keep building. There's been a lot of delays to the critical paths of construction. There's been a lot of factors outside of our control. So first and foremost, really, for me, what we need to look at and the changes that we need to be addressing and talking about is risk apportioning contracts, because otherwise we're going to keep ending up in this boom and bust cycle that we end up in. And I think, moving forward beyond that, a lot of these issues and this pain that we've had recently will provide quite a good catalyst for really looking at changes moving forward. How can we innovate? How can we use technology? How can we reduce the exposure to the critical path delays? How can we use different systems systems? How can we delay trades? How can we look at, prefab or modular to make things better? But right now in the residential sector, yes, of course, there are always people with new technologies and innovation. But to be honest, for most builders in the residential sector, it's been survival. For the last few years, the volume of business has been great. It's just been very, very difficult to fulfill.
Yeah, and I'd be inclined to agree somewhat. And I guess on another side of that, though, a lot of people would think of innovation as, fancy things that make a building cooler or more efficient or something that you see, but a lot of the innovation that we're getting involved in from a design and build point of view is actually getting a deal to stack up and working with our client to look at different ratios of use type, look at different delivery methods and procurement of systems and trades and things that can actually help them get a deal across the line, whether that's through funding with their external bank or whether that's with internal approvals. And so obviously, with increased cost of capital and even restrictions on the availability of it, we're all having to think laterally to actually get things to happen. There's a lot of concern in the economy about inflation and obviously being able to get supply contracts overseas and things like that, and so that sort of unknown is having a big impact on projects going ahead, and being able to structure the overall project in a way that allows a client to bite off pieces at a time and then get their approvals with more surety, pre-sales and things like that is proving really important for them.
From a data perspective and from our conversations, I can say that originally I wanted to talk to you guys about 5D BIM and drones doing surveying, off-site automation and industrialization, but like my co-panelists have said, it's just been such a tough time as far as costs and as far as stability in securing supplies and holding labour that it just doesn't make sense to talk about the whiz-bang things as far as efficiency. Spoke to so many worried builders at the moment, so many that work in that single house market, and we all know that it's inevitable that that's not going to be the major market segment in New Zealand forever, but as it is what it is. And it's not just the home builders, it's all the subcontractors and suppliers that are involved in that. So what we did, we talked to companies about what gets them through these downturns, because it's not the first downturn in this market in New Zealand and it won't be the last. And we hit on a few key factors, which is, for one, companies who are able to diversify or even be pickier, depending on the situation you're in. Also, companies that can quickly and brutally cut costs when they need to, and that could be equipment, it could be staff, unfortunately, short-term or long-term. Also, if you're able to grab a government contract, that's great. It's not perfect for all companies. And companies that were able to capitalise during the good times, that aren't dependent on job-to-job capital, that have the cash flow already built up. Because there are big companies that have very worrying pipelines at the moment, and we know how construction works. You will see some big names go down in a downturn, but in general, it's the smaller players that pay. So we're hoping that the innovations in the short term, it may not be the fancy stuff, it may not be the AI or the automated windows, but we're hoping that there's innovation as far as smart use of data and tech to get companies through this time until things are strong again.
I kind of always struggled with the term innovation. Everything I've ever read about it says you must have an appetite for failure, and it really touches on what Dan said. The contracts that we enter into as an industry have absolutely no tolerance for failure, so that makes innovating in a true sense really, really difficult. I guess, though, really, and others have touched on it, I just look at it at the moment, it's smarter thinking. I was at a seminar a couple of weeks ago where one of Simon's colleagues presented, and they're doing some really clever stuff in terms of rationalising a plant room layout to get a 6 Green Star rating on a cool store for Maersk. And that, to me, that's as innovative as we can be as an industry at the moment. I just think there's not enough margin in the industry to allow us to take big risks and make big changes, which is really unfortunate. As an industry, we try and keep a lid on cost increases. That's been very, very difficult over the last 18, 24 months, post-COVID and through COVID. Again, at the same seminar I was at where Simon's colleagues spoke, they had the chief economist from Infometrics was there, and although they're forecasting that construction inflation is going to drop right down, it doesn't get below zero, so costs aren't going to come down. They're just going to stop going up at quite the same rate that they have been. So as an industry, we probably need to look at ways to deal with that also.
I totally actually really heard what you were saying in regards to the fact that when the industry when it's struggling, it's actually very hard to consider innovation when you're really just trying to survive. But I just have a flip side of it, which is, and I'm actually thinking about, I also have an underwear business, which is a lot of information to share with you all, but we have had to get our pricing down to meet these large clients' demands. And in the process, how do we do that? Well, we actually have to use things like automation and smarter thinking to basically push our costs down to get our gross margins up. And I feel like in many ways it's the same here, which is despite the fact that it's really tough times, sometimes it's the tough times that breed the innovation, because out of adversity, in some ways you have to find ways to be more productive and using tech and new, just experimenting in some ways. Like in our business, we started using scanning and bought in scanners to replace measure-ups, because the measure-ups took 5 days and now it takes like someone a couple of hours to do a scan. The same with the use of drones, the use of BIM, and even though it's actually all about increasing your gross margin every time you introduce a new technology. And I know in this industry with things like off-site manufacturing, really all of it, that's trying to push towards that. So I suppose my thing is, even when the back's to the wall, it's often the best time to go really look at processes and go, how could we use automation? How could we use different technologies? I accidentally got put into a webinar speaking about AI recently, and I'm going to let you know I don't know much about AI. But in that, I learnt quite a lot. And I learned it from this guy, and he was at Becker. He's one of the heads of AI in New Zealand, and he talked about how AI could really contribute to your margin just by making you that much more productive if you actually embrace the technology and got to know what you're doing. So I thought that was just a really interesting way of looking at innovation.
Maybe two things I can add, but I certainly agree with what everyone else has said. This morning we had a team meeting, and our IT manager actually asked us for a really obtuse topic, and someone gave him a really unusual, like a brief on just whatever, and he typed it into ChatGPT, which you will have heard about, and he's got the latest version, I think it's 5, which you pay for. And the extraordinary thing is, within a few seconds, it produced an incredibly impressive document, and like really impressive. And so change is coming, and it's going to come to this industry as well. But as everyone else has said, it's very difficult. So that's the first thing. And a little bit on Simon's point, a lot of our projects, they don't really make financial sense. So where there is a lot of innovation at the moment is where clients, consultants, governments and construction companies get together with their supply chain and they look at the design, that they do a bit of innovation, they do find ways of making it cheaper. So there's a lot of that going on at the moment. Maybe that's not a sexy way of calling innovation, but it is innovation. So things are happening, but maybe a bit slower than most people want. So it's no secret because it's in the media. Kiwi Properties are building a 300 apartment build to rent at Sylvia Park at the moment and certainly intend to build a lot more. So our opinion absolutely is that build to rent is here to stay and is actually going to become a very big market sector. In speaking to Kiwi Properties, they reckon of all asset classes, more money went into build to rent last year internationally than any other asset class. So it's highly likely to be here to stay. It's been around in the USA for 40 years, as well as many parts of Europe. Two big challenges at the moment for anyone wanting to develop build-to-rent apartments is obviously construction costs, and the other one is I suppose, the tax laws, simplistically. And like Paul, not really into politics, but I know that the National Party has actually said that they will change law to make not just the interest portion of the loan tax deductible, but depreciation as well for build-to-rents going forward. So that's part of their policy. Who knows if they become the next government? If they do, that is going to make build-to-rents a lot more affordable. So I'm very confident that it's going to become a major part of the future, basically. In fact, one interesting stat that I heard yesterday as well was that 50% of all Aucklanders above the age of 18 now rent properties. So quite an amazing stat from the old quarter acre. You must own your own house from the past.
Yeah, look, I totally agree. I think it's definitely going to be a big portion of the market moving forward. I think international precedents suggest that it has to be. I read a report once that credited build to rent with a pretty much a mini building boom in the UK. So I think it's safe to say when we look at all of the factors of New Zealand in terms of population growth, in terms of whether we agree with a compact city like Auckland or not, we do need to build up. And I think build to rent is something which can help a lot of factors. It can offer obviously more security for tenants. There are plenty of benefits for it. I mean, even the larger scale build to rent pieces have greater amenity in them. They can have gyms, they can have pools, so it creates a more desirable living environment for all. So it is definitely something that's going to go. I think it is one part of the industry. It's one part of the conversation we should be having. I don't know whether I agree with people's thoughts that the younger generation aren't necessarily interested in home ownership. I think we can't use build to rent as an excuse to basically say, oh, this particular generation aren't bothered about home ownership. We do need to obviously look at how we increase housing affordability and the different methods of how we do that. But build to rent is here, and I think it is something that's going to grow. From a builder's perspective as well, obviously we have a challenge about thinking how we as a business can be part of that, because typically build to rent is only going to work in a scale where it goes up, and therefore that creates a different set of construction skills and requirements and experience. There's a lot of businesses on this stage who are very well versed in doing that higher density, but beyond that there's not a huge critical mass of businesses that have the experience, have the financial capacity or capability to facilitate those type of projects. So as much as build to rent may stack up on paper, even with the high building costs, even with the high price of land, we also need to be ensured that as an industry we are upskilling so there are more businesses that can build, and it's a transition that we're facing, so we feel it. It's a very relevant conversation for us to be having, because build to rent and higher density is definitely something that's here to stay.
Yes, build to rent. So I've actually, I mean, you probably know it all, but there's just been the new effectively rules coming out that it build to rent effectively where it's one landlord over 20 units, we'll call it units. And they've opened up the Overseas Investment Office. There's a pathway now for build to rent because it tends to be more institutional investors. And there's the interest deductibility exemption that they've applied to build to rent, effectively to create an asset class in New Zealand. I don't know a huge amount about build to rent, but what I do know is I have spent quite a lot of time in Australia. You can probably guess I'm Australian. And I was at the UDIA Congress last year, and Mirvac was presenting, and they're the larger of the build to rent players in Australia. They're in Sydney, Melbourne, Brisbane. And they were really interesting. They currently have 2,200 apartments in 5 properties for build to rent, and they do things like they develop and they're the landlord. They describe it as the flexibility of renting with the security of home ownership. And what's fascinating about it is that they end up becoming management companies as well, because they're managing all the amenity, which is they have cinemas, rooftop gardens, they have dog parks, they have dining which you share. So someone has to manage the rental leases as well as all this amenity sharing. And their point is, and what I've seen from overseas examples, is for build to rent to actually really work and to get to that level of amenity, it tends to be inner city stuff. Like in their case, their big buildings are opposite the Victoria Market in Melbourne, Newstead in Brisbane. Basically, high-rise, tends to be young professionals, a lot of amenity. And for them to be successful, they really have to be more than 200 units a pop. And that's why the Overseas Investment Office has got this institutional pathway. That is not a model we're used to in New Zealand. We don't know that model, and my question on it, and I don't know the answer to it, is I don't know if New Zealand's got the scale and the population to support a build-to-rent model in the way that it's being done overseas. And I think that you'd probably agree with that. It's actually it'll be interesting to see how it plays out, because if it's just a landlord putting up, owning, developing and renting out 20 units, that's not actually really what build to rent is about. So that was just my 2 cents.
Interesting points that Lisa made, but I tend to agree with Bruno and Dan. I think it will come. It has to come. We need 115,000 houses, according to the latest MB stats, just to fill the current housing shortage. And if we're gaining sort of 60,000, 66,000 people every year, we've got to do it somehow. And with all the constraints about not going out and going up, it presents a real good opportunity. I hope as a result we'll actually end up with a sort of better class of rental property, because people are holding on to the asset for the long term, so they'll make smarter investment choices up front and not drop myself in it. Not try and reduce the cost too much, so that you have an ongoing maintenance nightmare. Bruno's kind of touched on it, though. I read an article a few months back from one of the big law firms. They changed the Tax Act to recognise build-to-rent land as a specific asset class, which was a really good step in the right direction. They do need to allow depreciation like we get on commercial properties. I hadn't realised, though, residential properties are exempt from GST, so you can't reclaim any of the GST. That's either through the build process or through the maintenance process. So, I mean, effectively that artificially adds 15% of the cost of build-to-rent. So look, whoever's in power needs to look at those sorts of things. And you touched on overseas investment. There's probably a huge barrier there that we could make some good strides to remove and to encourage some big institutional investment. My understanding is a lot of the investors in places like the UK and in North America tend to be large pension funds. And look, we do an awful lot of work as a group with the guys at the NZ Super Fund, and they're very, very good to deal with, but they can't fund everything. So it would be good to open that door and make it a little easier for overseas money to come in, particularly if it's supporting an asset class like that.
pretty much agree with what everyone has said. Australia and New Zealand are pretty similar in that both are pretty early in their build-to-rent journeys, if you compare it to the US, the UK, Europe, and Asia. And another thing that's really similar is that in both cases, the governments are, again, not to get political, behind. We have housing crises, which includes both the inability of people to buy homes or maintain their homes, but also even rental crises in the major cities of both countries. And as far as consumers go and as far as finding people homes, build to rent stacks up in every case. And encouraging build to rent not only gets everyone in homes but reduces the need to build social housing, because there is a large number of people that fall between the gap of can you buy a home that's actually available or not. So yeah, it all stacks up. The other class of people we're seeing moving into build to rent in Australia, in New South Wales in particular, are actually over 50s. So I think everyone imagines it's the young professionals that love the facilities and the flexibility of not having to or not being able to buy. But the truth is also there's a lot of people who are a bit older. They may be ready to downsize, or they want to move to a more urban location outside of their house where they have either family close, other facilities close, in a well looked after building, which you're more likely to get in a corporate rental block with all the amenities. So from all accounts, the case for build to rent stacks up. It's just a matter of making it financially viable and attractive. And we know that we depend on governments to do that as far as taxation, as far as incentivisation.
Yeah, so I think obviously in answer to the original question, absolutely yes, build to rent's going to be a pretty big part of our residential economy in the future. But the bigger question is actually why is it not here already? And you know, in my mind, there's a number of things. Economics, you know, the ability to get those returns is probably the most obvious. But you know, we've got other things like our Resource Management Act. We've got local authority constraints around infrastructure and drainage and roads and transport, things like that. Normally these sorts of questions I reflect back to my time working in the UK, where obviously build to rent's a massive thing, and they've got a residential housing economy which is literally hundreds of years old. It's really well entrenched, and the rules around what you can and can't do are really well set out. And then if you want to do something that's outside of them, you need to work your way through a planning process that can take years and years. But companies and you know, organisations that are looking to do large developments put significant amounts of effort into it. They build in those amazing amenities for their tenants, and they make sure that they're close to transport hubs and on transport lines and things like that. Whereas in New Zealand at the moment, it's a matter of, well, you try and get a planning change, or you get a resource consent to approve, going against the current planning rules. And the teeth behind that are not enough to really drive the quality that you really want out of those sorts of things. So I think one of the biggest concerns I've got around this sort of change to the housing economy in New Zealand is the maturity of it, and the ability for the country as a whole to actually respond with good quality guidance and rules, and with enough flexibility, of course, to make these developments really worthwhile. Obviously, we've got a slight change. Well, it's a major changeover really from the New Zealand quarter acre dream, which maybe in the last sort of 20 years ago was still a hope, and in a lot of respects now it's just a dream for some people, and trying to convert our future generations into a different mindset is something that's important as well.
Well, I probably just talked to the floods this year in Auckland, and really retrospect, we applied what was the earthquake system from Christchurch with the red, yellow, the stickering, which probably, I think most people can say in retrospect, is probably not fit for purpose for flooding. So that was a good lesson learnt. My take on on this subject is that there's calls for local governments to add to LIMS about hazards like slips or what will be the climate change impacts. But the reality of New Zealand is that a lot of the local councils don't have the resources or the funding or the ability, the infrastructure, the people to be able to do that and actually go around properties and do that. So I sort of take it as, I think the insurance industry will drive a lot of what happens in this space in terms of what will be insured what will they consider uninsurable. So in many ways, my take on it is that the climate adaptation will be a story of insurability or insurance, and I can see that being a major driver in the next few years of where this is going.
Just further to that, I think in certain countries, such as some American states, they have, where they face a lot of hurricanes and things like that, there are standards from the insurers for which any builder or any developer can build their houses to, and that results in lower premiums. I think they call it gold standard. Similar in the UK, I think they have the NHBC, which basically publishes a set of rules for things like shower details and things, and that results in kind of better warranty covers. So there is some opportunity to have some sort of changes built into or organically be pulled through by the market itself, because I think, I'm not a civil engineer, but with a lot of what went on recently, just by putting in slightly bigger stormwater pipes wasn't going to make much of a difference. We saw the kind of flooding that exceeded even sort of council mapping. So it's very, very difficult to say how can we build buildings slightly differently to, better protect against that. Clearly for new construction, we can use the experience, use the information that we've learned to better plan moving forward. But I think a lot of the buildings that were affected had stood for years, and it was theories that were sound and relevant when they were built, but didn't necessarily hold up to a 1 in 200 year flood. So it's very, very difficult to say how it will affect construction moving forward, but I think for the sake of everybody, it's got to be a practical, pragmatic and balanced approach, because construction, we've already talked about it, is unaffordable anyway. If we start sort of over-regulating for very, very small risks, nothing's an ideal world. We just need to approach it pretty pragmatically.
I'm very happy to be corrected on this one, but I think from memory, New Zealand is also committed to being all new buildings to be carbon neutral by 2030 and existing stock by 2050. And there's certainly a momentum building to be ready for that, but not nearly fast enough. So my prediction is that we're going to get ourselves into trouble, and it's another cost in reality that's going to be added to construction. So who and how that is revisited, I'm not sure, but I think that's probably back to the politicians.
I think Lisa's hit the nail on the head. I think it'll be driven by insurers. I sat on an advisory board for MB for 3 years, and one of the things we talked about doing was doing a seismic map, a flood map of everywhere in the country, so local authorities could give that to people when they were planning developments, and it all boiled down to an issue of concerns about liability for the local authority if the information was wrong. So it never happened. So I do think you'll get a large part of it will be driven by insurance, but I think Bruno's also made a very valid point. The building codes changing to accommodate the carbon requirements that we've all got to meet, and I think they'll probably tweak the code to meet some weather requirements. But I kind of had a very simplistic view. I think it will impact how we build. We'll have to build stronger and more resilient buildings, particularly in specific zones. And then I think there will be other zones where we currently build where you simply will not be able to build moving forward. I don't mean to sound uncharitable. I've got the greatest amount of sympathy for everyone who was impacted. But if you build in a flood zone, at some point you're going to experience a flood. And that's, I guess, where we've got to be a bit smarter and stop doing that sort of thing and then build to accommodate the sort of weather events that are coming.
In addition to what everyone says, or I guess to also follow on what Paul was saying, I think we'll definitely see some areas where we just don't build anymore, or we don't rebuild anymore if they're already hit. On top of that, I saw a stat, again, open to correction, but we've probably got about 500,000 buildings in New Zealand that are in hazardous areas, and that's 750,000 people. So I think it is likely that we will see some managed retreats, which is not waiting for a disaster to hit and actually taking people and moving them to what is often higher ground or further away from a coastline. We will see probably different construction styles. I've heard of some enthusiasm for returning to the sort of pre-80s raised houses where water can flow underneath and you've got a timber floor that can dry. Stormwater drains, flood banks, etc. They're expensive. Sometimes they work, sometimes they don't. It depends on the situation. But definitely, if we look internationally, there are countries that have some out there ideas. I don't think we're going to expect floating towns in New Zealand like they've got in the Netherlands. But the UK, for instance, put a lot of money post a big storm into not only rebuilding but improving existing structures so that they could withstand future storms. But as everyone have said, there's no one sector that we can leave this to and just say, can you fix this problem for us? It's not going to be just the builders or the architects or the engineers. It's not going to be the local governments like was said here. What we've seen overseas is when this is successful, it's with collaboration. So collaboration of all the levels of government with the insurers and obviously with the building occupants and owners. And that's the only way we start being able to get through these inevitable and probably increasing events.
So as I was working as a structural engineer right through the recovery from the Christchurch earthquakes, so I've seen a little bit of the adversity that gets created out of these sorts of events. And one of the things that was really clear was that the buildings didn't actually have to be that new to perform reasonably well in an earthquake, and with some exceptions. Or they could be designed in places on land that was, good. Whereas there were a lot of houses that were built on land that was reasonably, subjective and proven so. That, in particular, what we call the residential red zone in eastern Christchurch, where literally thousands of houses have been demolished and nothing will be rebuilt there. And there were calls in the 80s to say that, this land's too soft, it shouldn't be built on, and of course those people were proven right. So I guess my response to the question is that we're going to see a lot more regimentation and adherence to guidance from the engineering fraternity, from modelling, and we'll see that the performance of buildings and infrastructure needs to improve. So it doesn't necessarily need to improve from the new standards, but it's generally in older developments and older infrastructure that problems occur and they're more easily exposed. I think the need to recover quickly and give guidance to homeowners and residents who have been affected is really important. And I would say that the red, yellow, and green stickering in the Christchurch earthquakes was not really fit for purpose as well. So there's got to be some improvements there, and I can't believe we're still doing that 10 years later. The only thing I would have a different opinion on is insurance. The reality is, insurers sit in London and Zurich and New York, and at a high level, they just want a return on investment. So and most of them are very heavy gamblers. They're taking a big risk. They're looking at probability and statistics, and at a macro level, they just go and look at an insurance opportunity and buy it on that basis. Down at a house-to-house level, they have no interest in that. They don't even consider it what the risk is of one property relative to another. And so when it comes to that sort of thing, there's still a potential influence from insurance, but it'll be driven by local authorities who will be fearful of being sued for allowing a development to go ahead and not being backed up by an insurer. I think at a high level, I suspect that insurance will come anyway. People will self-insure when there's an opportunity big enough, and well, when I say self-insure, they'll just not have insurance and still live in a house and expect to survive quite happily.
I think the market's looking quite healthy for the next sort of 18 to 24 months. That was borne out by the information that came through in the survey you guys did. Look, anecdotally, the residential market's not quite as buoyant as it was. I'm aware of one volume house builder whose orders are down about 40%, but I keep touching on it. If immigration keeps going the way it's going, and we don't get our arse into gear to make build to rent a more attractive proposition for people, I think we'll still keep building residential houses. I get one of the stats that always kind of knocks me a little is I think we had 55,000 residential consents at the peak, but we only built 32,000 houses that year, and I think people have got to sort of bear that in mind. So consents have come back. I think consents are now at about 35,000, so we've kind of got consents more in line with capacity than having a whole load of consents that we can't actually service. So I think the next 2 years is looking pretty good. Beyond that, I gave my crystal ball a bit of a rub this morning and it wasn't working too well. There's a whole load of things could impact the industry over the next 24 months.
Look, my crystal ball was a little more pessimistic about residential, but I hope that yours is more correct than mine. One of the key opportunities I think upcoming in New Zealand is tourism. It's still not fully up to what it was pre-COVID, but as someone who is a tourist in New Zealand, I can say that it is just one of the most globally regarded destinations, no matter how far away it is. And I think another good thing about the tourism opportunity is that it's not just Auckland or the key cities that are attracting increasing populations. So I think tourism, and I think that as we see what is probably going to be a rough 6 months for home construction, generally we see governments then upping their side of things to inject projects into the pipeline. So that is residential as far as social housing, but also community projects, education, a bit of health. So I think there'll be opportunities there.
Yeah, so I think it's pretty obvious that the house-by-house residential market is not looking that flash for a wee while, and I guess, but in terms of answering the question, it depends where you are in the pipeline of a project, whether you're at the planning front end phase or right through at the construction phase. But there's still enough work coming through across the commercial sector, particularly in industrial and distribution type projects. Government is at times of poorer economic conditions, governments traditionally come to the party, and we've seen a lot of money going into the education sector over the last 7 or 8 years, and the health sector is really starting to build at the moment. A little bit's probably going to get back into defence after a hiatus over the last wee while, and who knows about corrections and the like at the moment. justice. So a lot of courts have been upgraded over the last 2 or 3 years. But that's, so we will look at that government sector, local government, not spending they're trying to spend as little money as possible. Most work's being put off as they can. And then the other side of it, I think, where we will be looking is offshore money coming into New Zealand, whether that's, your IKEAs or Amazons coming in with retail and distribution centres, and then global supply chain businesses who are starting to emulate a lot more of what you will see in in other countries, UK, America, and the Middle East and the like, with huge 3PL facilities that they can service a huge range of retail, particularly online retail. And so I think that is going to probably be New Zealand's reasonably appealing still from an economic point of view. And so I think that's really going to bring us through the next couple of years for sure.
I might just add one further thing to what Simon said about why commercial construction is still busy as opposed to maybe residential, and that's, I spoke about ChatGPT earlier. Every time that you use ChatGPT, and the students certainly are at the moment, and every time you take a photograph with one of these, needs to be stored somewhere, get stored in a data centre. I think New Zealand has about 10 data centres under construction at the moment. My facts might not be 100% right, but to give you an idea, some of those data centres are over $200 million in value. So, and some of you've seen it in the newspapers, some of the big players have said there's more to come. So commercial construction has got, for various reasons, is still very buoyant. And I'm sure, with BTR and everything else coming, residential will turn around, as Paul said, a lot of people moving into the country.
Probably echoing what most people have said here. I think obviously the next 6 to 12 months are going to be pretty difficult, particularly in residential. So the opportunity right now is to control your costs, is to ensure the stability of your business, is to ensure that you're there for when things change around, and use this time really to look at upskilling your business, look at upskilling the people that you have within your business, and I guess reorganizing your business for the opportunities we spoke about previously, whether that's the transition from single houses to terraced houses, whether that's the transition for terraced houses to high density, because there's lots of opportunity moving forward, but right now for those exposed to a slightly slowing industry, there's a lot of challenges, and namely it is survival, and that's not to be pessimistic, because once you get through this period there will be a lot of opportunities. It's just about upskilling and making sure that in your local market you're configuring your business to appropriately capitalize on them.
I'm probably just going to echo all of the sentiments here today. I think potentially we're at the hardest point right now, which in many ways is a reflection of, from COVID onwards, we had huge labour shortages, no one could get any staff, we had immigration settings that didn't allow anyone into the country, we had massive construction cost escalation. I'm looking at Matt from EBOS here, who used to give a rundown of it all, where it was enormous, up to I think over 40% over the last 2 years that was in escalation. And the combination is that the business cases didn't stack. I did a presentation this time last year. Our interest rates were 2% OCR, and the prediction was we were going to peak at 3.5 back then. Well, we're now 5.5. So our cost of capital and money has gone up so significantly in conjunction with the cost price escalation of construction, in conjunction with the labour shortages. But if we look at the whole macroeconomic picture, it is actually changing really fast. I just found it quite phenomenal that between November 2020 and June 2022, we had net loss in migration every month except for one. That's amazing. And yet we've now had 161,000 people come into the country from June till now, Yes, we've had 96,000 leave and we've left with 65 net plus, but 20,000, over 20,000 came in March alone. And they're predicting basically 100,000 that we're currently tracking at. It's just that we don't have the data on it yet for this year alone. That will have huge implications in a really positive way for the housing sector. Interest rates, they're saying, you know, Adrian Orr, we've had our last rate rise. It's all going to come back. Well, he's saying it'll probably come back by 1%. So that'll come down. Construction cost escalation, as Matt would say, is already decreasing. I think it's actually a lot better times ahead, and I totally agree with a lot of the sentiment here today, which was, as an industry, for us to improve and to do bigger scale projects, we have to collaborate more and we have to learn how to use tech more. We have to understand things like AI and how they can be used in our industry, and that's actually what we should be learning as an industry and looking to overseas and getting learnings from them. Thanks.